Hi guys, I'm going to go over a trade that I took today on NQ that I took on my Top Step eval account. So I took the buy after the 1 minute inversion closure, and then I went for 20 points. So I'm just going for a 1-to-1, but within the first few seconds I actually moved the stop loss up to a 2-to-1 risk to reward. So it's actually not a bad trade. If I held, obviously I'd be up towards this high and up here. That would have been way more profit than just the 20 points, and as any of you know, 20 points in one NQ contract is about $400. So that was this move here. If it went 60, it would be obviously a lot more up towards these equal highs that were the target. But I was only trading one contract, so I wanted to stick with that. But going over what even happened here in the market is that we shifted down. We had SMT divergence at the lows after the NFP news. And anybody that doesn't trade NFP, I don't know why. It doesn't make any sense to me because these are some of the best trading conditions that I've ever seen. It's usually some of the best setups happen. But the first setup I missed was this 30-second inversion buy. So we hit the low SMT. So on the 30-second closure, I was looking for obviously these highs, this high, and then the data highs over here at the 8:30 from the news. We came up and hit that high, but I was actually looking at the 1 minute gap. This 1 minute ended up not closing exactly where I wanted it to, but then we ended up coming up into here. So when I was looking at the chart, I was actually going over like what happened in the pre-market, because I don't like trading as soon as market opens, and I didn't see this 1 minute closure until we already hit this high here, so that trade would be invalid at that point, and I like the 30-second better. So looking at all three of these side by side, you can see we had higher low, lower low, and then we inversed this, and then we continued up higher. So I was watching that, and then we consolidated all through this. And I'm not trading this consolidation. I'm just going to tape read and expect where price can go. And on the live stream today, I was actually just trading a paper account, and I ended up taking a 5-second time frame short within here. It was obviously paired with like a 5 minute, down to a 1 minute, down to a 30-second, down to a 15-second, then a 5-second. I took the short, targeting these equal lows that were down here. But all this is just creating that range. And a lot of these candles, so like let's go to like a 3 minute or whatever. Like a lot of people are like taking buys based on like these 3 minute buys here, or just like we hit this low, okay, we're gonna go buy up now after this closure. But it's just chopping. Like there's no liquidity really being like taken. But on the 15 minute, you look at the lows here, we have a fair value gap. So why wouldn't we just wait for the low to be taken and then target these highs that are up in here? Yes, I could have held, like I said earlier, I could have held the trade that I took after these lows were taken, but my plan says 20 points. So working on getting this account. So and that's how I've grown them in the past, and that's how I'm going to continue to do it by sticking with the rules. We traded down, we inverse this 1 minute. So after we took this low, I'm like, okay, we took the low now, liquidity taken. What's the next step? It's wait for the higher, liquidity taken into a higher time frame PD array, which was that fair value gap. And then we get in sync with order flows. Like that's the next step. And what's that? Inversion fair value gap, SMT, and we had all that stuff. So then we had the draw on liquidity up here. So just take the buy, look at the SMT at the lows. So we had SMT, let's bring it up here. We had SMT at these lows here. So lower low, but we had higher low. And then we came up, and then we also tapped down, lower low, higher low on the wicks, and then that's when I moved stop loss to break even. No, I moved it to 10 points. So my initial trade was wherever it was, like right within here, and then when the SMT was made here, moved the stop loss, came up to be about like 10 points. So from entry of right up here, the stop loss right there after that wick was made, I then was going for basically a 2-to-1 here. So then it went up and I hit my TP. Obviously could have went higher, but now we're in another macro, and I was looking for this short to happen, and I'm just gonna go over like what I'm seeing now in the market too. So we came up to this high here, we made a higher high, but we made a lower high here on YM, and so we then shifted down lower. And I was actually looking for this short based on this inversion from this wick to this wick. We came down, closed down below it, and then we inversed and shorted down into this range again. So I measured this range. This is probably close to 50%. So, but we had a huge volume imbalance, so I didn't like that. And I don't want to trade anymore. I already had the trade of the day, and I'm not trying to end the week bad. Like today was pretty good, and I took a short the other day in one of the PM sessions. I think it was after FOMC. So those are the trades. Then I had a loss on Monday. So that is what it is. So I'm gonna leave it as that. And that was it. But take it easy, guys. Love y'all. Peace out. Let me know if you have any questions. I'm not an advisor, so none of this is financial advice. It's just for fun. All right. See you later.